So let me start with one of the favorite questions I have for you, because you at Bank of America have a window into so much of America, consumers and businesses of all sizes. You sort of have a sense of where the pulse of America is. There's been a lot of changes announced and talked about in Washington. Do you see from your customers much reaction to that, either to the talk of tariffs or the one big beautiful bill? Do consumers or businesses, are they changing their plans because of that?
So if you look on the consumer side, in our 70 million consumers who engage with the economy every day, and they send through their accounts and spend the cash and everything, about $5 trillion a year. That grew at 4% plus the second quarter 25 or the second quarter 24. So they, because they're employed and because wage growth, and that's not every single consumer, but in the main, they are continuing to grow and spend more, and that helps the economy. And so you're seeing in some of the moderate income households, there's a little bit of moving around to different things. You're seeing people trade from one thing to another, less planes, more cruises earlier. That's leveling out now. A lot more going to movies because the movies are good. But at the end of the day, they're spending discretionary necessary at about the same percentage they traditionally have spent. They've got money in their accounts, they're employed, and the wage growth has been relatively strong. And so they're in pretty good shape. The credit quality is good. They have equity in their homes. They're low rate financing the mortgage. So consumers pretty good. When you go to small businesses, that's more the question, small, medium-sized businesses, because the interest rate environment hits them harder because they borrow on lines of credit short-term for a lot of their activities, and that rate went up substantially. And then you think about if I'm a $100 million company, a $50 million company here in North Carolina, and I'm engaging in the world finance, I'm importing goods and manufacturing them, further manufacturing them, selling them, it got pretty interesting here trying to figure out all the trade and tariffs. So I think the certainty on the tax rate helps them. Meaning the big beautiful bill passing and the tax rate, that's a very good thing. The alternative would not have been good if their tax rates would have changed. A satisfactory resolution to the trade so that they could learn the rules of the road over the next 30, 60, 90 days and get their plans for next year put together. And I think ultimately we're going to have a satisfactory resolution on immigration and population growth, because at the end of the day, what I'm hearing more from construction companies, farming companies, and travel and entertainment type companies is I'm starting to worry about I'm starting to struggle with labor availability at any price, and that's not that we got to make sure they have the workers, because they will supply a great service. The economy will continue to grow.
One of the things you reported today was net interest income, which is really important to all banks, but particularly Bank of America, and just steady growth that you're showing in that. How sensitive are you to the rates set by the Fed? If that comes down substantially, does that affect Bank of America much?
So embedded in our estimates, so we've told the world that this quarter we had $14.8 billion in net interest income, and that is the fourth straight quarter of growth, and came off the floor last year. This quarter, when I was talking to you, was the lowest it's been. This quarter was a record in the company's history, and we're saying we're going to grow from that record to 15.5 to 15.7 in two more quarters, the third quarter and the fourth quarter. That embeds in it the rate cuts in the market that are expected by the market. We only show it that way. If you have rate cuts above that, that would hurt that number, but it would still grow, frankly. And the good thing about that is because of great loan and deposit growth, 7% loan growth, 4% deposit growth over the last year, that's in the system. That's capitalized in. I mean, that's here. It doesn't go away. And as that continues to stay and we add to it, what you're starting to see is that sets us up great for next year for further NII growth and further EPS growth. So this quarter was the trickiest quarter to get through, because year over year we finally got some NII growth, but year over year the markets business doing strong, so expense growth is a little more robust. That'll get in line, and then you'll see NII drop to the bottom line, and it will set up for 2026 with even more growth.
When you talk about 2026, one of the things we're going to have is, in all likelihood, a new Fed chair. There's been a lot of talk, even today in Washington, about the Fed chair, and you've said you believe in an independent Fed. But if, in fact, President Trump gets his wish, as is his right under law, to appoint a new chair who will be more in line with his views, he said he thinks the interest rate really should be at 1% or even below that. Is that good for Bank of America? Is that good for the economy?
Well, let me make two things. One is, you're absolutely right. In May of next year, the term of the current Fed chair ends after being reappointed, and it's the right of the elected president to appoint the next successor and go through Congress. And I think in that dialogue around that, there'll be a lot of dialogue about, okay, how do you set interest rates? What do you think about interest rates? Because the Fed is an independent agency, and they're meant to be outside the purview of the executive and the Congress. They are called to task, and they're monitored, and they're reviewed, and all the things. But the reality was it's set up to be independent so that our central bank in America was independent. So I think no matter who gets in, they're going to look at it and have to look at the facts and make a decision, because if you drop rates too far, inflation may kick up, and then you're going to have to raise them back quickly. On the other hand, if you think the prior Fed has been slow to lower rates, you might lower them faster. Our team believes that the Fed will lower rates in the second half of next year by 100 basis points. No change until then, because inflation is still going through the system. That brings the Fed funds rate down closer to 3, which they think is probably more of a long-term rate, and frankly is more similar to what we had for most of American history. What's been unusual is the period after global financial crisis, a very low interest rate structure. That is really not a good place to be, honestly. We'd rather have a higher interest rate structure, a little more inflation, a little more robust economic growth. So I think everybody has to be a little careful about keeping that engine going, because if this engine fails, the whole world fails.
You also reported increased loans from Bank of America, which is good news for you. Tell us about your competition for that. We now have private credit really coming into that area substantially. There's talk that maybe that would be peaking. Is that the way you see it?
Well, I think that. So if you think about all our loans, $1.1 trillion of loans, say half from the consumer, and so there's not, that competition's always been there. Half of what goes on for consumer lending goes on outside the regulated banking industry. That's been true for a long period of time. We saw growth across all the segments. We feel very good about that. We go to commercial, the private credit affects sort of the leverage finance and some of the areas, and it's been an effective competitor. It's grown. I think we in the industry and we in the company, Bank of America, have come back with a way of operating we think is consistent with our credit quality, consistent with who our customers, and will also deliver a competitive product. And we grew commercial loans, leave aside the market-based business, we grew commercial loans, I think 7-8%, excluding the CRE office that we are running down still, in the middle market, which is as strong as anybody, and we feel very good about the credit quality of those loans. But more importantly, we feel good about the 30, 50, 70-year corporate relationships we have. And if they want a different kind of financing, we'll bring it and take it to the market for them like we've always done.
You also had a great quarter in terms of trading. Give us a sense about where you're going with your trading activities and your investment bank. In the past, you've added more balance sheet strength to that. You've come up in that. Do you plan to keep doing more of that?
Yeah, and so Jim DeMar and the global markets business, which is the trading business, as you call it, they are up 15% year over year. Both fixed income and equities were up. And he has had 13 straight quarters, I think it is, of year-over-year quarterly comparison growth. And so there's some ebb and flows in that business. But this quarter started off a little interesting with Liberation Day, and I think the first, 4 of the biggest days ever in equity stock trading occurred in the first week of April or something like that. So it was a pretty wild time. But over the course of the quarter, it got more stable, and they made it. We have given him more capital and more balance sheet, him and the team, more importantly. And that team, under his guidance, has delivered on it, is getting a good return on it. And we have lots of capital. If he can put it to work, there'll be more of it. The trick is he's also got to use it efficiently and get that return on tangible common equity, return on allocated capital straight. When you go to investment banking, look, April was kind of quiet, especially on the M&A side for us. It came back, and you saw us, as recently as 3 or 4 weeks ago, we thought we'd do 1.2 billion. We did 1.4 billion, and with pipelines full, Matthew Coder and the team are out there driving at it. We lost some deals to other people in the M&A. We were on the wrong side of the trade. That happens. But the reality is, what really changed over the course of the months was the financing side kicked in, and that's 3/4 of our revenue, and that was good, and that's why the revenue came up. And that team does a good job, and there's lots of places to grow. That is going to be much more dependent upon the IPO markets being open, the M&A markets, the M&A taking place. And I think with stability, again, back to the tax bill, some trade stability, and then, frankly, deregulation, you're going to see, I think, that activity keep kicking in as we move through 2025 into 26, which will be good for the economy because it creates a lot of activity, investment, changes in businesses, and all those things that we expect to see.
You took time out from your earnings announcement to really focus on artificial intelligence, something you have been talking about for quite some time and adopting, for example, with Erica that you have. Give us a sense of how that's changing the business at Bank of America. For example, on the expense side, does it really lead to saving some costs?
So in the end of the day, the artificial intelligence, as we know it, is an extension of a series of technology capabilities that allow us to take work and have machines do the work and people and enhance the people's ability to do more work and do more things and spend more time on things that aren't capable of going through that. AI just gives you a different different attack surface, for lack of a better term. In the past, we had 300,000 people 15 years ago in our company. Today we have 212,000 people. The company's bigger, complex, more transactions. From that time, our digital logins were probably, 10, 20 million a quarter, and we felt good about it. They were several billion, they're a billion a month, just to give you a sense. So think of all the investment to do that. But that digitization was customers doing things on their own at 10 o'clock at night and 7 o'clock in the morning, and that allowed us to save our time for our people to go out and help customers solve difficult problems. What AI, the place that we think AI has real help is in the preparation of our relationship management force and our small business bankers, our business bankers, our commercial bankers, our wealth management, our investment bankers, allows them to be much more prepared. So we're using those tools to prepare the information, pull it together, because it can take text and manipulate it and put it into the forms and the capabilities. So that's a big thing in front of us. We've done 500 or 700 pitches so far, and that cranking up. We see it in employee self-help. If you had a computer that went down at Bank of America, you can click on Erica for employees, and a chatbot will take you all the way through the replacement of your computer process, and it will involve no people, and you'll get the computer delivered to you. So, that's how we took that same Erica model that 20 million consumers use 200 million times a quarter and turned it internal. And so there's all these applications, and we think it has high application for the services business that Bank of America's in and the ability to keep doing work. And in the end of the day, we'll have teammates who will harness it and take it and use it to their advantage to make themselves even more successful. So, when we talk to teammates, we say, embrace this, let's drive it, and then let's figure out, what job you're going to do, but you're going to need this to be able to do any job in this company.
As you move forward with artificial intelligence, is it changing what you're looking for in the people coming in the door, the entry-level people?
No, we're just in the process of bringing in our 2,000 plus kids, new hires that just started, I think, this week. So think about that. 2,000 kids arrive. 1% of applications, less than 1% were accepted. So we had 190,000 applications and around 2,000 people coming in. So we're getting the best of the brightest. We love them. They're coming in. The point I'm making is there is a group that has to use computer skills and data skills, and that's one set of things. But everybody has to be able to use AI to help them be a better employee at Bank of America. So as you think about that, every teammate, and I have high confidence kids coming out of colleges are going to be a lot better AI than you and I might be, David, but we'll catch up to them someday.
One last question, Brian. You've said that you're moving towards stablecoin, as some other banks are as well. You saw Mr. Bailey, who's the governor of the Bank of England, really said that might have systemic risks because it takes some of the money out of the banking system. You'd be better off going a different direction. Are you worried about systemic risks from stablecoin?
So one of the questions, and I think what Mr. Bailey was talking about, is a question I think the banking system, the United States, the policymakers have to think about, which is, think about the money market mutual fund. About $6 trillion of deposit banks moved to money market mutual funds, and their utility was to invest in short-term, deposits, treasury bonds, et cetera, commercial paper. They can't invest long-term, so their ability to help the economy is really a limited amount. That $6 trillion is outside the system. If you said we're going to take the 18 trillion or whatever is in the banking system today, another 6 trillion out, you'd have to think through the policy ramifications, because to keep it stable, you have to have it invested in a very narrow place. And I think that's what Mr. Bailey was talking about. I think that dialogue is going on. Now, there's another side of this, which means those deposits will come back in the system if we hold the deposits effectively in escrow or custody for our customers who are out engaging stablecoins. So I think there's a lot of turns in the track between where we are today and where we might be on this. Our view is pretty simple. 10 years ago, you would have said the clients don't need a thing called Zelle, and now they use it twice as much as they use checks, and it is used more times than the amount of checks written by our consumers and the amount of cash transactions taken to cash LDM. So it's become the dominant payment network for consumers outside of card. That didn't exist 10 years ago. So we got to have the consumers adopt this. If they want it, we'll build it, and they'll use it. And if it's a way to transact, we'll be there to help them transact. We think, small balance cross-border transfers, in-app sort of information purchases, all these types of things are applications for. But at the end of the day, it's our customer who needs to say, I want to move money. I want to move money into euros. I want to move money into stablecoin. Sort of, we got to be able to do both for them.